talk more on these earnings and how investors are reacting to it at this time. We have Rotimi Olubi. Rotimi Olubi is a capital market analyst to tell us what he's seeing and reactions from this. Hi, Rotimi. Good afternoon and welcome to the program.
Yeah, good afternoon. Thank you for inviting me.
Great. So I don't think we can give all the credit, to the earnings, because even before the earnings started streaming in, we've seen huge moves in the market. But how are investors reacting to this? Is it adding any more move to the market at this time?
Yeah, okay. So made mention their results. We have seen their results. It's an improvement compared to H1 of 2024. You can see that their loss level is narrowing down given to high finance costs. But as a business, we can see that they are growing revenue, right? When a business is growing revenue, it just tells you there's a future of profitability ahead, right? So as a discerning investor that understand the dynamics of markets, the best strategy to look at or to consider is to be midterm on such security. Because if you look at the overall market, there's a significant improvement in the overall market. There's improved liquidity in the market. There are different participants in the market, right? And then given that there's positive optimism towards economic improvement, we've seen equity prices moved across the market. So irrespective of corporate performance, they are weak or strong, we still have people that are in the market for different investment orientation that wouldn't mind to consider a company security as a selection if there are signs of improvement. And Dangote Sugar has shown improvement. I believe given this position, subsequent quarters, we may likely see a complete turnaround in terms of profitability numbers coming up.
So, there's the fear of this bubble bursting. What's your perspective to that? What would you say to those who have this fear that this is looking too good to be true and it may just burst in our faces?
So as much so in terms of markets, yeah, when you talk about bubble busting, right, you want to look at what are the factors that led to the bubble, and then that can help you discern what will ultimately bust the bubble, right? In terms of improved market participation, I think markets are forward looking, right? So investors stake money in markets, hoping that the future will be better, right? And given the macro numbers, and then the current administration, and even in terms of monetary policies and fiscal policies, the economic fundamentals are improving, right? So those are support systems for financial markets, right? So the market sees the future, and then the market leads the future. So hence we are seeing this significant move in markets. And then at some point, we had seen a market change over the last past 2, 3 years when we saw most foreign investors moved out of our market pre-COVID and during COVID. Our markets became predominantly local based, right? And most of our local investors, like the PFAs, the asset managers, they tend to have longer investment orientation, and so markets rise by supply and demand. It's also a factor of economics that we also consider. When there are not a lot of supplies in market, you tend to see a fairly stable market as compared to a more volatile market where a majority of the participants are short-term oriented. For example, when our market had more foreign investors, if there's any significant uh, something negative that they perceive or preempt, they start divesting. It tends to put our market in more volatile stance compared to the market we have now. So we have a complete change market where different participants are in the market for different investment orientation. That tends to create lower supplies, right? And then we tend not to, I doubt we will see a major bust. We can see retracements, but those retracements are their accumulation point for major market participants that have longer orientation. And that's why we might likely see a fairly stable market into the future, except we begin to see doubts in terms of the macros. But as long as the macros continue to look positive, we would expect the market to continue to be solid. It's against a bust.
Should growth, or you think we will get to a level where it will just be sustained and then we'll say this is our new normal?
Yeah, so every security has a mean reverting level, right? Yeah. So at that point, that's where supply and demand equal. And that's also a function of investors' orientation, like I said earlier. Most of our businesses, right? We can see the numbers, right? You can see the numbers from the banks. You can see the numbers from non-banks, right? It's positive. Companies are growing earnings. When earnings are growing, new valuation metrics, new valuations are preempted, right? And then those are factors that keep prices. The only time we can see we may see a major shift is when companies begin to have declines in profitability. Then valuation begins to get revised. At that point, we may begin to have a challenge because it's about pricing of assets. At every time investors make a stake in the market, they believe that that price is a fair price to participate in the market.
Thank you so much, Rotimi Olubi, Capital Market Analyst, for your perspective on the program.
Thank you for inviting me.